What's up, guys? Nico Wrench Capital. Good morning. Tuesday, let's do it. We have a little bit of news hitting at 9 o'clock Central, so it's about 40 minutes out. We will have new home sales, not a lot of volatility, but we get the USCB Consumer Confidence read. That also hits at 9 Central, and the forecast for there is 94. The previous was 98.3. So we'll see what we get there. As far as what we're trading today, we're going to be trading 6 funded Apex accounts. And let's do 2. We're going to trade 2 Take Profit Pro accounts today. So we'll add one in and see what we can do here today. Good morning, guys. How you all doing? How you all doing? So, yeah, it's not a crazy news day. Really all week. I guess on Thursday what we get, well, I guess tomorrow we get U.S. durable goods. Thursday we get initial jobless and U.S. GDP, but that's an hour before the market opens. So we're not going to be live for that. That's okay. And then Friday is a big day. Friday we get PCE. That's an hour before the market opens as well. But when we're live, we will get University of Michigan sentiment, the final number. So for the University of Michigan number, the preliminary read is usually more important because it's usually pretty accurate and it hits first. Now the final read is a revision, but usually we get a pretty good estimation of what's going to be going on with the final, with the preliminary read for the University of Michigan number. So that's fine. The PCE though is really going to push things around on Friday. Not nearly as much as it did during the inflation time, but you know, that's really the big news day here this week that's left. But again, today we get new home sales and USCB consumer confidence 30 minutes after the bell, so 9 a.m. Central. Let's take a look here at what's going on this morning. So, man, we've been seeing this pretty consistently lately. A nice little controlled move upside. And these controlled moves upside, I have a hard time trusting these because it's very rare that you just see this all night or throughout pre-market, the early hours of the morning, and then you just see it continue during the day. You almost always get an influx of volume causing some kind of volatility movement, and it would not surprise me at all if that was to the downside. It's not good enough to take a trade on, but I'm just considering that as we head into the day here. Some kind of discretionary call making, I think, is worthwhile as long as you're not just taking gambles on it. So there's the 2-minute chart. That's what we're looking like right now. We are 7.5 minutes out from the open. What's up, guys? How we all doing? So yesterday was, oh my goodness, yesterday the range was crazy tight. The ATR on the bars was so tight. It was a third. It was at least half, but more like a third of what we're used to. And yesterday was a tough day. After the stream, I ended up waiting a while. Like, it took a couple hours to even find anything. I took one trade and I made like 3/4 of an R. Small green day, and I was like, you know what? I'm just done. I'm gonna go work on something else or head out early or whatever. So yesterday was kind of a slow day. I know a lot of people struggled. I saw some people kind of blew up yesterday. When you have the range that's so tight, unless you're really going to spend the whole day focusing on micro scalping, I think it's a kind of a tall order to sit there all day and really try to trade heavy. Yesterday's the kind of day to be patient, but yesterday's rare. We don't see that kind of volatility collapse typically. The VIX was also very low, if you guys saw that. Broker, which one are you talking about? This one or this one? This is, well, you know, this is Schwab, I suppose, but, you know, Thinkorswim is not a broker, it's just a platform. I just like their charts, and then up top here is NinjaTrader, which is a platform and a broker. But I'm plugging in today, what we're going to be trading is some funded Apex accounts and 2 Take Profit Pro accounts. By the way, Apex, baby, is still 80% off single day pass, makes the business model work a lot better. That'll be ending here, I think, within... Again, they have the last call on whether or not they extend it, but that should be ending within the week. So, oh, they're also running a big deal. 250K and 300K accounts, $85 lifetime activation fee, which is kind of nuts. Now, they're not easy to pass, let's be honest. The 250s, You need to hit 150, sorry, you need to hit a 15,000 profit target with a $6,500 trailing drawdown. And that's about a 2.3 ratio-ish. And the 300Ks, you need to hit a 20K profit target with a $7,500 trailing drawdown. But if you can pass them, even if it takes you a number of tries, the eval is $33.40. Once you use code BIG, that gives you 80% off the eval. So that's inexpensive enough to just run through them and try to get past. But then the lifetime fee is $85, which on like the 50Ks, the monthly is $85. The lifetime's $125. Good man taking advantage of the pricing on the 300Ks on Apex, up 9K on both accounts. Yesterday, looking to pass these soon. Have a few 50K PAs, taking my time on. Good work. Yeah, those 300Ks, it's a little bit different with the... I like to be aggressive in the evals because I don't want to sit around and waste time. I think they're inexpensive enough to be, to justify being a little bit more aggressive. I've never been the kind of... I know some people will just take opposite sides and accept their fate. The world does some crazy things to you, so I don't want to just put my fate in the hands of the volatility. So I try on the evals. I don't just take a full-blown gamble, but I size up much more than I would on a PA account, which I trade relatively small in the PAs, and then I just ideally scale the accounts out. But yeah, the 50Ks and the 25Ks especially, you can definitely be a little bit more aggressive on. Whereas the 250s, the 300s, they're still cheap, but if you're too aggressive, that trailing drawdown usually will catch you. So obviously you're trading bigger because the profit target and the drawdown is larger, but I think it probably takes a little bit more time on average to pass those because you're really having to deal with that ratio. The ratio on the 25Ks is 1-to-1. On the 50Ks, it's, what is that? 1.2-to-1. On the 250s, it's 2.3. On the 300Ks, it's 2.6-to-1. Profit target to trailing drawdown. So that can be kind of tough. But when you pass them, it's nice because you can trade a full mini. At least I think so when you run the numbers. You can trade minis in all the accounts, but man, people love to trade like 3 minis in the 50Ks. I think that's, depends on your business model, right? If your business model says, okay, I'm just going to churn through a batch of accounts every 2 to 3 weeks, then fine. You know what? But if your business model says, well, I want to hold on to some accounts for at least, a month, 2, 3 months minimum, then I think if you have your heart set on trading the minis, probably going to want to go with the 250s, at least the 150s, but the 250s or the 300s. There's 2 minutes out from the open, getting some dump off here, to get that bigger drawdown and justify trading at least 1 mini. Otherwise, I think you're kind of in micro land. At least that's where I like to sit on the smaller accounts. Okay, for those of you guys just joining us, remember, 30 minutes after the bell, we have new home sales and the bigger number, which is USCB consumer confidence. Okay, that one's going to be the one that causes any volatility. We're not probably going to see too much out of new home sales. But consumer confidence, that's kind of the bigger read for today. It's no CPI, but forecast there is 94, so we'll see what we get here. Getting a little bit of a dump off heading into the open. If you look here at the 5 minute, we're giving up that 20. That also was a breakdown off the 20 on the 2 minute. What's really interesting is you guys see this. I think what we wanted to see was a test of these stops, and now we're getting some buyers down below where those stops lived. Stop hunting is a favorite of mine. Big fan of stop hunting. It provides liquidity. There you go. There's a bigger even move. But, stop hunting like yesterday, guys, if you were here yesterday, which, by the way, I'm live every single morning, 8:15 a.m. Central. Sorry, we got some headlines coming in. Nothing important. Okay, so with stop hunting, if you're gonna buy, let's say a break, or let's use this as an example. If you're gonna sell a breakdown with a stop limit entry. Like you set it right below this wick and you want to get a fill and use stops that are scattered through here as liquidity to push you in the money as a scalp, and then you take profit before it reverts. The range has to be enough, whereas yesterday the range was so tight. There's the bell. Let's see what we get. The range was so tight yesterday that it's really hard to ask the market to give you an extra push when you're selling late in a down move or buying late in an up move. So I like ATR to be at least average, if not above average, for stop limit entries, and limit entries for reversions work well pretty much on any day. But yesterday it was tough because we weren't getting a range developing. Okay, so getting a little bit of a test here. Really what I'm looking for off the open, I'm going to wait maybe about 10 minutes. Yesterday we had, I think it was yesterday, we had some news hit at 8:45. So today I'm willing to start trading a little bit earlier if we get a setup. 9 o'clock is the news, but 8:40-ish. I like to give the market at least 10 minutes or so, sometimes 15, to really make a development and see if we can't get a range forming or start forming a trend. Okay, now as far as context, if we look at the daily chart, bottom of your screen, what you really want to do is look at the past like 5, right, daily bars and try to get an idea of market inertia. Like you look back here, if you were coming into this day, you might say, okay, well, we're slowing down a little in volatility, not using hindsight to our favor, right? But we've definitely seen a bearish bias with maybe some trend movement and then a couple of range days. So let's see if we get a trend day. But, coming in through here, a lot of range days lately. Now, if you guys remember last week, we saw, big ranges with trends in between the range, which is a little bit of a mix of the two. And then yesterday was just, let's be honest, yesterday was kind of garbage as far as price action, at least for the way that I like to trade. Some of you guys probably made money. A lot of people got chopped up. I just was small green yesterday. A little frustrating, so I just walked away. The market was just giving me nothing. But let's see what we can put together here today. Up just about 0.25% so far on the day. Again, we'll be trading 6 funded Apex accounts, varying in size, small in most of them, and then a little bit bigger in the 2 Take Profit Pro accounts that we'll be trading today. So, see what we can do. Got to stick into that 20. Really on both charts, you look at the 2-minute, but really the 5. So again, I like to give the market about 10 minutes just to clean itself up. See what we can put together. But usually we get that kind of 10-15 minute opening range, and then we oftentimes either start forming a ascending or descending channel. A straight up horizontal channel is so hard to trade because horizontal levels break so easily. They're just so tempting for people to break. And they usually do. But ascending is a little bit better. Descending is a little bit better. They're equal, I guess, to each other. And then trends. Trends are obviously fantastic, but they're rare. In my experience, probably about 80% is my best estimate. 80% or so of breakout attempts fail. Okay, so a lot of people will bet on breakouts on every attempt with like a 1-to-1 ratio. And I think that's a bad move because if 80% or so breakout attempts are going to fail, if you're going to bet on those breakouts, you really should be going bigger reward to risk. Whereas, with using that same stat, if you're going to scalp inside of a channel, I think it's fine to go negative reward to risk because 80% of those attempts are going to fail. As long as you're not stopping yourself out too tight and just getting chopped up, which is frustrating. Bit of a move out of Tesla. Tesla yesterday, man. Had quite the day. So this is really common. You get off the open, you get a little bit of opening volatility. We actually got more volatility coming into the open, which is funny. But you get this opening volatility, and then you usually hang out within a range for a little while, which I find is some of the most difficult trading of the day, which is why I give it time. It's not just an arbitrary rule. I do that for a reason, because when I try to trade this range intraday, I usually just lose money, and I think most people do. Because there's no wind, right? It's just back and forth. It's a lot of algorithms triggering. It's a lot of positioning being done at funds with a 3-month outlook. That doesn't help us as traders, right? So let that clear out, let the orders fill, and then we usually get some kind of 55, 45 setups forming, whereas this all here at best is like 48, 52, 49, 51 probability-wise. I'm looking for at least like 55. At least discretionary speaking. All right, a couple more minutes here, then we can start looking. The range so far, honestly, is a little bit better. It's not huge. You know, we're seeing maybe 25, 30 points, which is not big at all for this time of day, but it's, I don't know. I really hope we don't end up with a 12-point range on a 2-minute chart. You know, at 10 o'clock like we had yesterday. That was absurd. That was ridiculous. That makes our lives very, very difficult. So again, if you're just joining us, USCB consumer confidence forecast 94 hitting at 9. That's Central Time, so about 23 minutes out from that, but I'm not against trading before that. I don't believe it's actually something worth checking. I should check that here. Now, take profit trader. Yeah, they usually don't. So take profit trader, they don't like, or they really don't allow you to trade during specific news events, but which news events they are is kind of up to them. So they typically send out an email. I usually try not to trade around really any significant or semi-significant news events with take profit, because that's a break of their rule, but they will usually send out an email. I did not get one today for the consumer confidence read. Whether or not, or more so, if you can't trade a particular news event. So like CPI, they don't want you trading that take profit trader, whereas Apex doesn't care. But that's fine. I don't really trade news events, at least gamble on them in like a pro account. Anyway. But that's worth noting. If you trade a news event accidentally with a take profit, like let's say you're trading a bunch of Apex accounts, and you are copying the take profit accounts, and you accidentally trade like CPI, that's a failing rule. At least it can be if they make the decision for it to be. But no email, so I think we're safe as far as trading around news today if we decide to do that. You're getting a little bit of an opening flush out of, you guys are saying in the chat, out of mainly Tesla. Well, I guess Tesla and Nvidia. Big bounce out of Apple. That's about it, though. A lot of wicks here. A lot of wicks. Let's get this range expanding, get things looking clean. I don't care if we have a trend day. I don't care if we have a range day. Just give me one or the other without a bunch of ugly wicks and a decent range. And it's off to the races. All right, so it's about 8:40 here, which means we can start looking for setups, which means the market has to give us some setups here. Right now, really what I'm thinking here, guys, is this very obvious range here. However, it's not developed enough yet, right? I mean, you see this kind of here. Don't overthink the trend lines, right? Just kind of draw them how you think other people might be thinking about it at around the mean. Like if someone might draw it here, someone might draw it down here, just straight up draw it in the middle and understand that it's a big range, okay? But I'm really looking at that right now. If that breaks, then I'll have to obviously change, and this is not enough. We only really have 1 or 2 touch points on either side. I prefer 3, at least on the side I'm trading off of, which usually is going to be the resistance in a descending channel and the support in an ascending channel. You can be more aggressive and trade the other side, like the support in a descending channel or the resistance in an ascending channel, but I think that's a more aggressive approach. Yeah, Eric, note to self, I'm trading probabilities, not feelings. Damn right. So this is actually a very decisive moment here. If we end up seeing this break upside, then it's starting to think, okay, are we gonna break highs here and return to that uptrend that we saw pre-market? Or if we end up rejecting here, this could very well turn into a channel and then I start scalping. Really the top end of here once we get our 3 touch points. So yeah, we're testing that 20. The 20 itself is not, I don't trade just off the 20. It's not enough to me. Just trying to scalp off EMAs is something I tried years ago and it didn't work. I gave it my all. I did it on a lot of blue chips. I did it on ETFs, and I just couldn't make it work. So I need more than that. The reason I keep it on there is for context. But they are more relevant in momentum stocks, where it's mostly people. But here you have a lot of funds, a lot of institutions that kind of takes that edge and squashes it, as far as the EMAs are concerned. Do you look at that 2-minute top right? This is the moment where you get that breakthrough and then a retest. And this retest means a lot. This retest is oftentimes the difference between, okay, do we break out of the channel, render that channel pretty meaningless, at least for now, and then return to an uptrend? Or do we break back into the channel and we just have to redraw the trend lines? 17 minutes out from news, we got time. This isn't CPI, just consumer confidence, so you can, I think, push the limit a little further as far as how close to it you trade. With CPI, you know, you might want to hold off 10 or 15 minutes before the number even hits if you're not trading the news. But with consumer confidence, the volatility's kind of here and gone. Yo, Rich, you ever trade like this Tesla short on options? Well, depends how you mean, how do I trade the options? So, I am not big on purchasing short-dated options unless it's solely for the purpose of scalping them. But for buy and hold, buying puts that expire in 3 days is a very difficult game to play. Because there's, I mean, a lot of people say, oh, it's rigged. Well, it's rigged in favor of the seller, rigged, right? In the form of the Greeks. And that's for a reason. Now, rigged is like, it's similar to like if you walked into a casino and you placed all your money on 00. If you lose, was it rigged? I mean, not particularly, right? It's just bad odds with a high potential reward. That is short-dated options with just obviously different probabilities than exactly the same as roulette. But I'm a big fan of directional trading on options using spreads and sell to open strategies. Big fan. Been doing that for years. Those strategies actually, for about, let me think, maybe 12 months minimum, paid all of our bills. We're pretty broke, and I solely used a small portfolio to trade spreads on options and mid-dated, not super short-dated, but mid-dated options sells strategically, kind of like running the wheel, but with less money. And not a lot of money coming in at that time, but that got us by. So we're seeing a bit of a range expansion here. This channel's pretty much going to have to get deleted. But I do want to keep that bottom trend line, but what we're going to do here, just make a slight adjustment. Oh, Moody's. Moody's living up to their name. They just put out a headline, United States fiscal strength on course for continued multi-year decline. Moody's always putting something moody out. Okay, so just looking for something to develop here, whether it's a trend or a clear channel. Really, right now, my best idea here is little limit order scalps toward the bottom of this channel. But again, that's more aggressive. In a descending channel, I prefer to really short the resistance of it. But in a more aggressive setting, I absolutely will buy the support. Understanding, though, you're going kind of counter trend, at least in the time frame, given the time frame of the channel itself. Tom, what is the difference between these YouTube sessions and the tomb? Very simple. So, well, there's, I guess, two, but one is less crucial. I will be live starting Friday on YouTube, 8:15 to 10:30. The tomb, I will be live the same stream, 8:15, except we go till at least noon at a minimum. And if you watch on YouTube, there's ads. Even if I turn it off, there was a few years ago a change on YouTube where, here we are getting a downside test that support. There was a change on YouTube a few years ago where you used to be able to turn ads off and there would be no ads on your videos. Well, Google, who owns YouTube, changed it so that even if you turn off ads on your channel, they still run ads and they just take all the money. So it's like, well, I might as well make the money if there's going to be ads anyway. So there's ads on these streams on YouTube. Unfortunately, there's nothing I can do about that at all. But the tomb is longer, close to twice as long, not quite, and ad-free and uninterrupted. And it's a private community. So that's the difference. That's for the futures membership. If you go the gold pass, you also get on top of that, you get the audio squawk every morning from 6 a.m. to 8 a.m. Central. Okay, here we are getting a downside test. And a big breakthrough. See, this is the aggressive side. We're gonna make a little bit of an adjustment there. Let this work itself out and then see if we get an additional test. Buying the downside test of a descending channel is more aggressive. Again, like I said, I definitely prefer to short the resistance in a descending channel. This can get you in trouble if you are using tight stops, and especially if you're using no stop. This exact setup has gotten a lot of people in trouble. You can trade it with edge if you're very disciplined and you really select your entries well. Whereas, again, like buying the support in an ascending channel or shorting the resistance in a descending is way more forgiving over a big sample size. It's way more forgiving, but this can absolutely be done. I just think it's a little more challenging. By the way, speaking about the tomb, the deal changes every day before Friday. So that link in the chat, today only now, It is 30% off. You can get locked in at 30% if you use the code BIG. You can either join just the futures membership, or you can join the gold pass and also get the audio squawk like I was talking about. Mushy bounces. A downside tested there, and I will enter with a limit order. Now you might be asking, well, why don't you just put the limit order? Yeah, CB consumer confidence is not going to cause mass volatility, but it definitely moves the market. Probably less now than it did 2 years ago, obviously, with the inflation stuff going on. So you're asking, well, why don't you just put the limit order out and wait to get a fill? Well, a couple of reasons. First of all, the trend line moves. It's descending, right? And secondly, if you get unexpected news like black swan stuff, then you get a fill when you really didn't want to get a fill because the setup changed when that news hit. And oftentimes what'll happen is it'll dump off, fill you, and then just immediately stop you. G-Strong, you thinking good news upside? With consumer confidence, I don't know. It's not relevant enough right now. Usually what's going to happen is you're going to get some chop around, and then the market's just going to either pick a trend or a channel and stick to that. I don't want to hang around for the chop. Yeah, downside test. I'd put that on if we can see a downside test of this trend line. That's a more aggressive trade, for sure. That's absolutely more aggressive, but I would put that on. Now at this point, we could argue a trend line additionally, which would actually be great for me here, just after that 20, with this big overextension at 840. Okay, so if we can see a rejection here, all of a sudden this channel has become a lot more defined, and that opens up a lot of scalps for me. So, I mean, to be honest with you, I really do hope we see a rejection here. I can't trade heading into that because this breakout attempt is a little bit more up in the air than I'd say 80%. Because the channel is less defined, we really only have 2.5 touch points here. So if we end up seeing a breakout here, we could very well come up, hunt these stops, which is another trade idea for me. Potentially buy this breakout, get a little bit less volume through here, but if I could buy this breakout with a stop limit and then hunt these stops through here. I know there's a lot of stops up here for shorts, and get up through 435. That's enough liquidity to give me at least a little in the money. That range isn't huge, but I don't know, 10, 15 points. I really like when this range up top here is this time of day, maybe 40 to 50. Meh, 40. 40 is kind of my sweet spot, I think, for the range this time of day. But what I'm looking at here right now, we're at 23 on the ATR, which is tough. Okay, so we are seeing a breakout of that trend line. Yeah, Moody's won't give it a rest. Another headline out of Moody's. Even in a very positive economic scenario, U.S. debt affordability remains materially weaker than for other AAA-rated sovereigns. And the market doesn't care because Moody's is always putting something out. Yeah, absolutely trade micros. I think for the smaller funded accounts, I think micros are the move. Trading minis and anything less than 150K account, I think is just a bad idea. I think it, again, unless when you read out your business plan, you're like, okay, you know what? I'll have expenses. I'll blow accounts on average once every 3 weeks. Fine. I'm trying to get one payout per set of accounts, and then I move on to the next accounts on average. Okay, fine. Then go with the 50s and trade a mini. Fine. But I know a lot of people, they're really against the idea of blowing accounts, but then they go and they buy the 25Ks and they trade minis. It's like, I don't get it. Okay, getting this breakout attempt here, and we're getting a wick. So the 2-minute represents this very well right now. What I really want to see is either a return to this channel or a test upside of this 430 region and look for that stop hunting region. It's all through here though. The stops, the more spread out the stops are, the lower probability the trade gets. But this is really only 5 points of spread, which means I would absolutely be open to doing this and setting that guy right about there. So we'll see if I have the opportunity to do that. You know, is that the highest probability trade in the world? No. But is it worth putting on? I think so, as long as we don't get these bull bars continuing to shrink. See, if this was this here, if this was the bar coming in for a test, you get big bull bar closing near its high, smaller bull bar closing more off its high, smaller bull bar closing even more off its high. What does that tell us? Well, the buyers are probably similar, but the sellers are stepping in as we come up toward this resistance, or what they see as resistance, right? So if we see this one even worse, like it closes down here with a big top wick, all of a sudden that trade becomes a lot less attractive because the sellers are stepping in. But if we can get this bar like popping up, closing near this high right here, toward the high of this bar, or on the next bar, or whatever, then I put on a stop limit buy just above that wick. 100%. And then leave it for, depending on the quality, 15 or 30 seconds on the rollover. And if we get a fill, great. Then if not, I got to pull it because then by then the setup has changed. If you don't get a fill within 30 seconds on a really high quality trade, or 15 seconds on a slightly lower quality trade, I think the setup has changed too much and the buyers have stepped out, at least in the way that you're looking for on continuation. There we are, getting a bit of a push. That's going to be that news hitting. Okay, so that's USCB consumer confidence. Let's see what it came in at. No headline yet. There we go. 92.9 USCB consumer confidence, 92.9 compared to a 94 forecast. Okay, new home sales, not that it matters as much, but 0.676 million compared to 0.68 million. Okay, so small miss on both of those. We'll see how that changes things. Now, you guys see that? You get the consumer confidence read mostly moving the market compared to the new home sales. And you get a lot of up and down, a lot of chop, right? The consumer confidence in 2025 is not going to be the kind of number that, you know, causes this massive 200-point move and then a continued, you know, 800-point move upside or downside. What it's going to do is it's going to trigger some volatility, get some volume coming in, and then hopefully either create a fresh channel or trigger somewhat of a self-fulfilling trend that we can actually take trades on. All right, U.S. Conference Board headline here. Average 12-month inflation expectations rose again from 5.8 in February to 6.2% in March as consumers remained concerned about high prices for key household staples like eggs, Jesus, and the impact of tariffs. I've been eating a lot of eggs for years and years and years, and the egg prices have been crazy to see. Wild. It's actually very interesting. What I saw the other day was that, you know, like the kind of lower quality eggs that you can just buy at any grocery store, and then next to it they have like the organic free range. I go for the free range, not for necessarily any. I just like the way, obviously, the yolks, they look different. They're deep orange. I think it's a good argument that the nutritionally they're denser, which I'm after, obviously. But also for the sake of the chickens. I mean, we've all seen the footage, right, of the chicken farms, factories. And I think there's a reason. You know, obviously the yolk color is representative of the life they're living. Yeah, pasture raised is what I meant. But, you know, you get those pale yellow yolks, it's like, these chickens aren't living the way they should. I can't imagine they're very happy. And that is important to me. I don't want to support an ugly industry like that. But my point was the lower quality eggs were more expensive. They were like twice the price of the pasture raised, which I thought was extremely interesting. Okay, here we are getting a dump off. If we can get a downside move down to this bottom end of this channel and give me a damn bounce, then we have a setup. Yeah, this move here is a big deal, I think, for the rest of the day. This move here off the consumer confidence volatility, I think determines whether or not we see a range for most of the morning or a trend, which I don't care. Just give me one or the other here. Well, that works itself out. I will be back in 2 minutes. All right, baby, we're back. And what are we looking at here? You know what this feels to me? This feels potentially like the early developments of a wide ascending range. Now, what I am kind of considering here, you see this, right? Which I'd actually probably draw more like that. This could end up turning into this. That would not surprise me at all. I'm actually very interested in looking at that. But it's kind of wide, right? It's 70 points wide, but I'm not going to complain about wide after yesterday. Heat map. No, I've never used it. Nothing against it. I keep my stuff as simple as I can. Don't overcomplicate it. I think the more stuff you start adding, the worse you get. Okay, that range, that ATR is sitting at about 25. It's holding on to a little bit. That's not bad. I believe the same time yesterday was quite a bit. Were we below 20 at this time yesterday? I think we might have been. So I really want to see that hold up. That ATR, by the way, if you're just tuning in, is that kind of teal flag at the bottom. What that represents is the average range of the last 10 2-minute bars. So that was frustratingly low yesterday, is definitely lower than average still here today. But I want that higher. Too high is also a problem, by the way. If that said like 98, that gets tough to trade, but it's better than when it's too low because you can just size down and then widen out. But when it's too low, do you really want to size up and then tighten up in case you get unexpected volatility? It makes it a little more difficult. But I'm very much so interested. Here, look on the 5-minute, it's even cleaner. That ascending channel, we could certainly see that develop here. I would love a trade down here, a limit order entry down here. But I'm also, if we get a slow grind upside test here, I'm not against taking a short there either. But this is absolutely developing. We had a 3-point touch, just a couple of touches. I wouldn't call this 4, I would call this 2 touch points down here. Usually I'm after 3+. Now again, there's discretion here because if you see a giant bull bar, like a single 2-minute bar, push upside and test this before it closes or when it closes near its high, that's a tough short, especially when it's the top of an ascending channel. What I really want here is a kind of a controlled move into that resistance. I do like the bottom better though. The bottom is much cleaner. The top is, we got those 2 more volatile bars. We got the news bar, which is a little less meaningful, right? This big wick here. And we got this big volatility top that's forming that channel or that trend line. So the bottom is certainly cleaner, and since it's ascending, I would much prefer to take the bottom, but I would take the top here. We gotta get out of the middle of this channel. This is just chop. All right, give me a move upside here. Or just outside of this little range here. I gotta trade the outskirts. Exploit, that's a hell of a compliment. I appreciate that. So entries right now, I'm really looking at, if we get a controlled move into 2450, I'll short that with a limit order. If we can get a maybe less controlled, but the more controlled, the better. But really any move into 2380, and I'll enter there long with a limit. Now, in between now and then, one of those tests, obviously consecutive bars breaking out, like a big couple of bull bars that push through that and kind of render that short meaningless, I would actually buy that rollover and look to hunt these stops, baby, because I know that shorts have stops all through here. Same with longs way down here, but we're not down there right now. Yeah, someone asked that. Yeah, that's the gold Ember mug. Had two of them. The last one broke. But they last a long time. I like it. All right, give me a push. 2450 with a controlled move, and I will absolutely sell that. Hey, good. We got some sellers stepping in. Now give me control up through 2448. A little bit of a pop through, but then sellers stepping in. So you clear the stops in the way, and then boom, I'll enter short with a limit. Or we come down and test 2380 and I enter long. These wide ranges, they're a little bit frustrating because they can definitely, they decrease my frequency, the way that I trade. How often I trade, I mean. Fear and Greed Index, currently sitting at a 29 out of 100. That's sitting at fear right now. Not that it's entirely meaningful, but I think it is an interesting thing to look at. Look at this daily. You know, I was talking about this yesterday. You got this huge move from above 22.3 down to almost 19. I mean, that's less than a month. So is this the V? That's the big question. Do we hold 20 from here? Normal ATR for the 2-minute chart, it's going to depend on the day. It obviously changes. Well, and time of day is a huge factor. But this time of day, I would say the average ATR on a 2-minute chart is going to be somewhere between like 30 and 50. Okay, that is well within range. Right now, it's lower than normal, for sure, for this time of day. I mean, barely on average 20 points over 2 minutes is not a lot of movement for 9 a.m. on the Nasdaq, for sure. Yeah, yesterday was even worse, believe it or not. Now, what I would love to be able to do here is tighten this up. If we could see this prove itself, that'd be great, but I'm not going to draw it yet because it hasn't. I don't love the wide ranges, by the way, because when the ATR is low like it is today, it just takes forever to be able to actually get setups that have some kind of meaningful edge that are worth putting on, which, by the way, doesn't mean you're going to make money on every setup. It just means it's like 55-45 compared to 50-50. But this right here, this is the kind of movement that, you get a day like yesterday, you get a lot of people coming on saying they blew up, saying they were big red, whatever. This movement is the reason. Gotta slow down, let it come to you. But when the market's cooperating, hit it. I mean, you guys have seen me take 30 trades in a day on videos, right? We just haven't seen that the last couple of days. But if the market gives it to you, can't be afraid to step up. I gotta say though, I am interested in the bottom of this potentially tightening channel. Right around that 20 EMA, you guys see that? We have a potential new bottom of this channel forming. You could draw this a couple ways. I'd probably draw it in the middle. Don't overcomplicate the trend lines. You start overcomplicating the trend lines, you start taking them way too literally. And they're never meant to be literal, they're meant to be ranges. Because everyone's going to draw it a little bit differently. Every algorithm is going to detect it slightly differently. So you end up with this 5-10 point range, minimum, right? On the entry. Yeah, I'm 100% though. I'm looking at that bottom now, right around the 20 EMA. We might see this channel tighten up, and then I can really start hitting it with scalps. Now again, if you're looking at the top of this trend line, you're like, I'm gonna enter as soon as we test. High of day. Right, pre-market, yeah, but high of day, nonetheless, there's some stops there for sure. So you gotta be careful, because if those stops trigger and push you 20 points higher quickly, I don't want to be in on that. I want to see that break, see some stops trigger, and then have it be disappointing to the bulls, and then I enter short with a limit. But I'll also take the bottom if we can get it. What are you guys trading today? Are you just trading evals or funded? Again, today on stream, I'll be trading 6 funded Apex and 2 Take Profit Pro accounts. Eric evals today. Bigfoot Futures Desk eval. Evals. Cool, man. Apex evals. Yeah, that's my mentality too. I'll decrease the edge that I'm after. It's not so literal, right? But I'll decrease the edge that I'm after on evals because I mean they're just so inexpensive. I just want to get through them and not waste months and months in evals, even weeks, even days and days sometimes. But then when you're funded, I think you have to be a little bit more picky, and that's okay. I mean, it's part of the process. Josh, personal account, there you go. Going to start evals next week. Yeah, I think both is a good idea. Curtis has the idea, selling premium in the personal account might scalp some NQ. Yeah, man, premium selling is, it's boring business, but it generates revenue. I've been doing that for a long time. You know, but I think that's the thing though so I think you have to understand the context of what you're trading. You're not gonna get rich selling premium. It's just gonna make you richer, if that makes sense, over time. But you can, it's hard, but you can make yourself relatively rich compared to what you currently are trading like prop. Because you have so much leverage in the futures market, you have so much leverage if you're good, if you're disciplined with the business model of prop, that if you can be one of their winners, you can go from not very much money to a lot in not that much time, if you put in the screen time. Okay, and then over time, you can put in less and less screen time if you want. I like trading. I've never been like I want to trade 45 minutes a day kind of guy. But if that's what you want, fine. Yeah, Eric, make sure you have you restarted Rhythmic? Yeah, Curtis, exactly. Premium selling, it just opens up some freedom. It's not going to take you from broke to rich. That's what more aggressive trading is for. I mean, there's an old saying, right? You get rich by taking large amounts of risk with small amounts of money. And you stay rich by taking small amounts of risk with large amounts of money. It's very true. I think you should mix the two if you're looking to do both at the same time. Like keep your money, but get more aggressively. You mix the two, and then you start slowly. It's all a spectrum, right? You slowly move over as you get more and more. Okay, now's the test of that bottom. We'll see if we get this new trend line here actually holding. If we do, then we have some little scalps that we can take. But if we break this, then it's still the old trend line. All right, there we go, getting a bounce. God, these ranges are so tight that even a small move, there we go. I have to let that bar play out. That was an aggressive bar. See this? We took out some stops. Right now the sellers, we're gonna see if the sellers step in. But we have 30 seconds left on this candle. I need to see if this bar closes near the high. If it does, that changes things. Now we gotta see how the rollover acts. 15 seconds out until this bar closes, we'll see. Close near the high, right? That's gonna bring in some buyers, but we still have that upside trend line. Okay, so this is gonna be a battle here. This is very decisive here, whatever the market decides to do here. Do we maintain that channel or do we end up breaking and pushing to new highs? That's the difference between trading channels and trading trends. But I need more information here. Market doesn't know what to do. Look at that. You have both coming in. You have buyers seeing one thing, sellers seeing the other. They're going to cancel each other out until one pushes the other out of the way. Okay, 15 seconds out from the close of this bar. We'll see how this one closes and rolls over. I want to short the retest of the close here. You see that? That still puts us outside of the center of the range. But if we pull back in, I'll buy the retest at the bottom of the range here. Because this range has now proved itself quite a bit better. We don't quite have our 3 super clean touch points. There we go. The breakout of high of day was a little bit weak, but that was pre-market high. Okay, so not necessarily everybody was watching that, but I think a good amount were watching that. All right, give me a downside test. I'll buy with a limit right around around 22, 21-ish. You do have some stops right below the curl here. Okay, so I am considering that. It absolutely looks weak here, but I want to see this test. Come on, give me a pullback. Okay, with each test, this channel gets stronger. So that's fine, but look here. Look, we can actually redraw this now. Remember we were talking about this downside move turning into an ascending channel? It now has, but it's now tightened up, which is beautiful. So we're eventually going to get a breakout of this. However, until we do, I'll trade this channel. About 80% of breakouts are going to fail, so probabilities are all right until we get there. Top of this channel right now, we're looking at about 2460. Now, with each additional test of the top of the channel, it's also a high of day. But the longer the high of day sits, the more stops are going to accumulate above that. Now, this high has not sat for very long. It's only sat for about 6 minutes. In this case, whichever comes first for me. Resistance is sitting currently right up at a test of 2460. Market takes an hour to move 10 points. There we go. Bit of a push. And we'll enter short there at the top of that channel. All right, we'll see how that works out. This is what we're currently looking at. Kind of the top of that range there. We'll see if we get a breakout there. Now we have these, you see this one bull bar, decreasing bull bar. Now we're getting another bull bar here, so I'm interested to see how this bar closes. This is how we're looking across the board, though. Not the strongest close ever out of that bull bar. Not bad for the bulls there, but Not incredibly strong. Now this trade, if we ended up in the money, I think I'd take it in this region here, which is not, you know, ideal. Okay, but I'm asking for a big downside trend line break. Okay, if we did get that. So my 40-point take profit in this market is kind of a tall order. Trying to see a slow grind. What the bulls are looking for, but sellers are kind of stopping them, at least for now. We'll see. Now remember, we're going counter trend here, okay? So going counter trend, I prefer to go with the trend if I can, but we never really got a clean downside test here. So I'm taking whatever comes first, shorting the top of this channel. So let's see if we can get this channel failing. This is a breakout attempt right now, and then a fade back downside. But the bulls are pushing through. There's the pop up to the 75s. It's always helpful to give these trades room when you're especially like shorting the resistance of an ascending channel or buying the support of a descending channel. I think the stops can't quite be nearly as tight. We are getting a nice push. Not the strongest move ever, though. We're getting some wicks here. So as far as news here, we just have Trump signing some executive orders at 1 p.m. Central. That's it. That's all we have left here for today. So it's pretty clear. Getting a slow grind push. Stop just above 5. The bulls are definitely trying to grind it higher, but the sellers are really wicking these candles. Now this channel, I'm thinking about management here, because this channel has certainly broken now. We'd have to redraw it. If, you know, this trade here is... You can't take another trade in this channel, at least to the top side after this one. Okay, so we're gonna have to redraw this once this one's done here. But I'm thinking about how to manage this. Right now I'm going to leave it and see how the bulls resolve this trouble around the 480. This is the part of the trade where you just hands off. And in a market like this, these trades can take some time, so. But this is looking to me like kind of a slow grind, so I'll tell you what. I really want to see how the next 1 or 2 bars closes. And then if we still get the opportunity, I might think about managing this early. Yeah, these are those kind of bars that just grind. They're kind of strong, but they're not the strongest bars in the world. There's clearly still sellers trying to step in here ahead of 5. And it's that slow grind kind of move. Which for now I have to let work. All right, well, this works. We're managed. Everything's set. I'll be back in 2 minutes. There we go. We're back. I don't know what happened. The camera, like, died. Okay. No, I'm still in the trade. Did not close. Just letting it work. We are taking on heat, though. That's where we currently sit. So that channel that we traded the top of broke, and we are now kind of hanging out up here in this region. It's just kind of sideways chop weak. So I'm going to let it work. See what it can do. Stop just above the 5s. And again, I'm trading small enough where the 40-point risk is my initial plan, so I'm not widening out or anything crazy. That range, currently sitting at 16. That's lower than yesterday. Listen, a fade throughout the day is absolutely normal. 16 is definitely low. But we gotta do what we can do, right? Work with what we can. That 20 EMA is also coming upside toward our entry, which is fine because the bottom side of the channel has not changed yet. If the bottom side of the channel had changed, then it becomes a manage early kind of scenario. But for now, I gotta let it work. Yeah, I got my stop right above 25. It's at 25 and a quarter. That's a coincidence, kinda. But also thought ahead on the entry, because I know that my stop in this case is going to be 40 points. But now the concern becomes, well, are we forming a new tight little channel? But a horizontal channel I actually don't mind at all because the outskirts of that are more likely to break than an ascending or descending. All right, Lee. Hey, have a good meeting, brother. All right, here we are getting a push, test downside. See, this is where we decide, okay, is this going to be a sideways horizontal channel? And then that 20. This trade has gotten a little more complicated because we have that 20 now right at the entry. But the channel bottom, again, has not moved. So that's okay. Are the odds in my favor at this time in this trade? Less so than at the entry, I'll tell you that. But not enough for me to pull it early, at least discretionary speaking. So here's the test of the entry region and that 20. See what we get here. Remember that 20 on the 5 minute is about 20 points lower. Maybe 25 points lower. But on that 2 minute, it's right about at our entry, which is okay, because the 20 on the 2 minute is not going to be as relevant as the 20 on the 5. All these things get considered, though we have been seeing some respect out of the 20 on the 2 today thus far. So, it's worth mentioning. These 40-point ratio trades that I'll put on, the one on Friday took, I think, 2.5 minutes. And this one here is taking its sweet time. I think we are about 20 minutes into this trade, which is long for me. But you can thank that ATR for that. Has it now dipped? Yeah, the ATR is now below 20. Meaning the average range of the last 10 2-minute bars is less than 20 points. Which is tight. So you see on this 2 minute here. You can see it over there, but also here, you got this kind of flat top. There's a risk of a breakout here that would probably push us pretty much to our stop. But I want to make that occur. This thing's going to have to earn this stop out. And I'm going to have to earn a downside break through the 20 on the 2 minute. You know, these bull bars, I wouldn't say are extraordinarily strong. Kind of a battle right now. See, at this point, this is the kind of situation you get in where it's... That 55-45 has deteriorated since the entry. But I'm in that in-between zone where I don't have great reason to manage early here. Other than emotion, which is not good reason. Alright, well, here's the test of that flat top. See that on the 2 minute? Right around 90-ish. 89, 90. All right, test, and there's the break through that flat top. See that, guys? Stop sitting right above 5. It's probable that we get stopped here. So let's see what happens. At this point in the trade, managing early, I've never found to make sense. Because the money you save on the stop, I don't think is worth giving up the amount of times that it will reject prior to a level like this and then pull back. But that's just me. That range is still, oh man, it's just deteriorating. That range is what, 16 now? ATR? Yeah, see, flipping, a lot of people, what they'll do is if they're wrong, they'll flip their position. I mean, it's fine. I don't think there's anything wrong with that. But the problem that I come up with is usually when you end up flipping, a lot of times you have not good enough reason to do so. And it's purely an emotional decision when a trade is going against you. And then you flip and it turns out you're just within a range. So I think flipping makes sense only if you're catching the wrong side of a trend. Like a very clear trend, where this is not, I would say, a very clear trend. We're going sideways. Yeah, flipping is your indicator that you're tilted. Yeah, I think that's... I think flipping, unless you're in a big trend, is a pretty good indication. So you end up going, oh, I'm wrong short, let me flip long. And you flip long right at the top of a developing channel, and that's even more frustrating, I think. Yeah, that range is collapsing. So below 16, yeah, 15.92. It's possible we end up forming an uptrend here, but we don't have anywhere near. You know, if I had to make an argument here, I would draw it like this. Okay? And then probably like this. So we're collapsing, right? Which means that we're going to see a breakout in either direction. But that's, I would argue, close. The breakout potential is closer to 50-50, I would argue. Yeah, we're trading, well, right now we're just trading 6 funded Apex and 2 take profit. 6? Yeah, 6 funded Apex and 2 take profit pros. Well, I'm definitely not in the driver's seat on this trade. Absolutely not. And it's probably going to take its time. I really want to see if this ascending wedge, I'd kind of call it, is going to hold. We really only have 2 touch points, arguably, on the bottom side. Oh, man. Hold up. 1 second. It's getting hot. It's getting hot, man. The camera's overheating. We'll see if that happens again. That doesn't happen all that often. I think it's just really hot in this room right now. Okay, so we keep testing 90. I think the probability of getting stopped on this trade is now very high. But again, managing early in this situation, just because you're not in the driver's seat anymore, again, I have not found to make sense just to save 5 points. Now it depends how tight your stop is, right? With a 40-point stop, I'm trading small enough where, 5 points isn't a tremendous percentage. Funded. No evals today. No evals. Channel's really tightening up. This wedge, I'd say. All right, come on, give me a breakdown through the bottom with enough strength and stops to push me through the 20 and into the money. Yeah, we're cooking, baby. Well, that there is a problem we're gonna have to take care of, isn't it? I had that happen maybe once, recording all day. But that's the camera overheating. That's not the computer. So I'll have to take a look at that. Yeah, fan might be helpful. We're getting a little bit of a breakdown here. Keeping the trade alive, I don't know. Again, we're definitely not in the driver's seat here at this point, but just gotta let this thing work, see what it can do. Yeah, no, the PC's fine. This is just the camera, which is separate. We're really attempting a breakdown through here. Take a look. Then we're coming into the 20 on the 2 minute. 20 on the 5 minute is about 20 points lower, maybe 22 points lower-ish. See if we can hold this breakdown through the channel. And save this trade here, potentially. Juice, no, in this situation, I would not consider adding. First of all, because with this wide of stop, with the drawdown in these accounts, again, I'm trading different size depending on which account. So what you see on the screen is not consistent across all the accounts. But, and I'm using a copy trader to change that. Okay, wait, here's the retest. You guys see that? The retest of that trend line that we just broke. That's very common to see. But an ad would size me up a little large, and the probabilities at this point have shifted. So since the probability is no longer like 55-45, damn, and we're sitting at about 51-49-ish, then no, I would not consider adding here. All right, hold up, I gotta fix this problem with the camera. Okay, well I did what I could, but I'm gonna have to fix this for tomorrow. I'm gonna have to blow a fan on the camera or something. The battery in there gets hot. Probably easier to just use a webcam, but using a real camera, I don't know, you get complications. So, the trade's looking a little better. I mean, we may have a saving grace here, but we have that 20 kind of in the way. So I'm still certainly not in the driver's seat, but giving it room. This trade's going to take some time here, so letting it work. Really attempting to break at that 20 on the 2. That 20 on the 2 minute has been respecting pretty much all of today, at least after 9. But to be fair, some of the tests were also a bottom trend line, so I can't just give all the credit to the 20 for that, in that case. Come on, give me a break downside through that 20 and drop 55 points. Yeah, that ATR, look at this. The ATR is at 13. That teal flag down here. 13, man. Yesterday we got as low as like 12 around this time. But that's crazy low. We look at this, we're respecting the 20, but it's getting mushier. And the bounces are just weak. Yeah, there you go, there's a little push. Yeah, crypto, unpopular opinion, I'm not big into crypto. It has its use case as a speculation instrument. But until I see it quicker than electronic USD at a drive-through of Starbucks, to me the use case just is not justifiable. Doesn't mean it can't go to 1 million. Purely off speculation. Went to 100K off speculation, right? But as far as long term, like replacing the dollar, it needs to be faster. It needs to be more practical. I'm not going to pay with Bitcoin just because it's cool. I'm going to pay with Bitcoin because it's faster, saves me time, is more convenient, saves me on any fees, is more secure, is less traceable, I suppose, if you care about that kind of thing. Right now, it's a massive inconvenience, and I'm big on convenience. Well, ATR is still falling. But when you see a falling ATR, you oftentimes get a big outlier bar. Yeah, meme trading. Hey, I mean, if you want to speculate, you can speculate. You want to go to the casino? You're an adult, go to the casino. But It's different. You know, it's a tall order to call them both trading, I think. You know, futures or ETFs or stocks versus meme coins. It's just a different game, and that's okay. Do whatever you want. Well, we're gonna have to see a tough break downside to save this trade. Again, we're definitely not in the driver's seat here. Really sticking around that 20 on the 2. It's being more relevant currently than it is on a typical day. That 20 on the 2 minute. Really on the 5 minute, the 20 is typically a little bit more relevant. We just haven't seen as many tests today, which is common, obviously. You know, it'd be nice for the music if you could play. Now, YouTube gets mad. They copyright all your stuff. But if we could play copyrighted music, but just have a little tag in the corner that shows what's playing. Oh, man. Oh, man, that'd be a game changer. All right, now you guys see this. We're forming kind of a descending wedge here. We have this descending 3 touch points and a flat top. Now, flat tops, I'm not big on flat tops. You're going to have to not look at me for a second. I'm not big on flat tops because they have a high risk of breakouts. Okay, but with a descending wedge, if the flat top can hold, that's good for us. Camera's cooking, baby. Yeah, I'm going to have to get a fan on this thing in the near future. Haven't had this problem much in the past, but obviously streaming. ATR now below 13. We're back in 12 territory, man. That's what we had yesterday around this time. Low. Looking forward to PCE. Maybe that'll kick this market around a little bit. Not nearly as much as 2022, but PCE's on Friday. So it'll be nice to get some actual news going here. Then Thursday, we get the, of course, US GDP quarter-over-quarter final number and the US initial jobless claims. Tomorrow, not a lot. We get US durable goods and EIA crude oil. That's about it. The German 15-year yield. Yeah, these are the trades, man, where they take 45 minutes. Have no reason to manage early, at least not a good enough reason. But, you know, your average trade duration is going to go up when the ATR is 12, you know, at 10 a.m. It just is. So, it's fine. It's just slow. And as a scalper, slow is not, I would say, my strong suit. But I can deal with it on a day like today. Coming in for another test of that 20 on the 2. We're holding it, but the tests are getting weaker and weaker and weaker. If we can just see the market accept its fate and fade downside through, that would be very nice for us. Making a test here. Now, with each additional test of that 20, you are hitting buyers. So as the buyers reload in between tests, you can get more and more buyers you have to take out to go downside. But they also typically get weaker as the tests get weaker. So I'm interested to see. That's not a break. That's just a test downside through. Well, that's working. That test. There we go. A close just below the 20. That's going to trigger a little bit of decision making. Nothing crazy though. We are cooking, baby. I'll get a fan on this tomorrow. Hopefully that'll fix things up. But in the meantime, in the meantime, as I was saying, so the Apex sale guys, the 250, the 300K accounts, they're big lifetime PA sale. It's or activation sale, I suppose. It's only $85, but the 80% off and single day pass ends the 31st as well. So usually they put it back to something like 50 after an 80%, but we'll see what they end up doing. Obviously, I'm not in the loop on the sales too much, but that's what we're getting right now. So I like to take advantage while the sale is going. 80% is good, 90 is rare, but 90 is crazy when they run 90. Okay, Spec, I'll give that a shot, man. Thanks. isn't a problem I've had too many times just filming. Even streaming, I don't think I've ever had this before. Well, there we are, back to break even. Let's see if we can get a push. Now, should I take it off at like 1 point in the money like a real degenerate here? We're testing on the 5 minute, the 20 EMA, so that's going to be relevant. So I still would not put us in the driver's seat. But we're getting closer. Let's see. Now, on the bright side of this trade, guys, you remember earlier, way before all this sideways chop, we had that 20 coming up, really making my reasonable target maybe 20 points. Well, if we look at like the 5 minute now, target currently sitting around 420. Yeah, it's wide. Okay, but I intended this trade to take a little bit longer. You know, we really don't have a whole lot of obvious junk in the way before then, but we'll see how this plays out. The bad day trader. Friday was day one. Now it's every single day from 8:15 a.m. Central to 10:30 on YouTube. And every day in the Tomb, also the same stream goes to the Tomb starting at 8:15. But in the Tomb, starting this Friday, by the way, we start at 8:15, but we go until at least noon in the Tomb. So it's longer, happens to be ad-free, because we're streaming directly to Discord. Actually, something that I haven't mentioned yet is that the delay, depending on your internet connection, the delay for the Tomb stream should be even less. The YouTube delay is very low, I made sure of that. It's a couple of seconds, but in the Tomb it should be pretty much close to instant, again, depending on your internet. That is on pre-sale. Today it happens to be 30% off. You can lock in 30%. And then, you know, every time you get charged, you'll pay 30% less than everyone else. That's today only. And the stream over there starts Friday. Again, this is a pre-sale. That's why it's on sale. Well, I should probably tell you where to go to get that, huh? There, it's in the chat. Make sure you use code BIG, otherwise it won't give it to you. Well, we're sitting in the money here, but we still have that 5 minute. There you go. We're still battling that 20 EMA on the 5 minute, which is a very, very common EMA. A lot of people watch that 20 on the 5. So paying attention to that, but things are slowly improving here for us. 5-minute is really trying to hold on to that 20. We've seen a little bit of respecting, but it hasn't been incredibly obvious as a respecting point on the 5 today. But there's going to be some buyers there, almost certainly. We'll just see if they can hold it up. Yeah, man, as far as charts, I love Thinkorswim. Until I have a reason to switch, TradingView is going to have to wait. TradingView has gotten a hell of a lot better since I looked at it last, maybe 2020. But I prefer TOS for charts still. See that ATR? The teal flag at the bottom? The average range of a 2-minute bar in the last 20 minutes is now 11 points. 11 points. Yeah, the fees on Schwab could definitely use some work. I just like their charting a lot. As far as executions, they need to be quicker for me to be interested. They're kind of slow, we're being honest. Well, on the 5-minute here, it looks like they're trying to hold that 20 EMA. We'll see if it holds. Yeah, you know what? With executions on Schwab, listen, especially if you're trading stocks, especially if you're scalping stocks, and it looks like that's not going to hold on the 5-minute. If you're scalping stocks on Schwab is the best example. You punch an order, and listen, I'm used to it like you look at center point or light speed, you press an order, you're instantly in. So I've been kind of spoiled in that department, but you look at Schwab, you press an order and it feels like a year later you get filled, and it's like, how the hell am I supposed to scalp on this? But they do have great charts, I'll give them that. Much better than center point or light speed. Well, it looks like we're trying to give up that 20 EMA here on the 5-minute. Let's see if we can. Now, by the way, I'm pushing it. I'm pushing the stream further. On a typical day, I'd already be in the tomb only. Okay, just give you an idea of schedule. But I want to see if this trade can play out for us. Those buyers really trying to hold that 20. All right, back in 2. All right, and we still sit pretty much flat. Sounds like some trippy Mario Kart or Pac-Man music. Yeah, this is the copyright-free stuff. I found some stuff that I actually like here. But you know, if we could go copyrighted stuff, that'd be crazy. So that 20 EMA, it's really trying to hold. Got to leave this guy on, let it work. We're pretty much sitting flat on it currently. Yeah, the PM session, I assume you mean after hours, not pre-market, because you said into the PM session. So, well, first of all, lo-fi I think is a little slow for my taste. I like it, but it's a little slow. Now, the PM session, I find very choppy. I find it really hard to trade. During Asia, I think you see a lot more manipulation because volume is so low that it's easier to manipulate. Here we are getting a little bit of a better push into the money, but that's, gonna need to let this thing work. My cutoff time on a typical day, now sometimes I will trade like 15 minutes after the bell if I'm still in something, but my cutoff on a typical day is gonna be usually like 248, right before the 250 or 350 Eastern bar. And then if I do trade after that, I'll trade maybe 52 to like 58. That's a typical day, and then I'm done. But I don't always trade that late, it depends on the day. Well, we gave up that 20 on the 5. Finally, about time. Now we'll see if that 20 turns into resistance on the 2. Trying to wake back up and hold that 20 on the 5. Those buyers just won't let it go, man. Well, this trade has now been on for what? Well, officially over an hour. It's been about an hour 10 minutes. By the way, that's way longer than my average trade, but on a day like today where look at the ATR currently, it's at 12. That's okay. That's within reason on a day like today, where volatility is so low. At 20 on the 5, man. Still trying to hold. See if we can't give that up, get down to the 440s. You know, there's really not a lot of junk, because this upside move that we got, we didn't get a ton of obvious wicks where a lot of, you know, longs might place stops. You could argue here, down in this region. But by that point, we're already at target. Target here on this trade is about 420. Looks like the wifey might have popped in here. You see that? You see the 2 minute here, guys? That 20 trying to turn into resistance, and then on the 5 minute, still trying to hold it. Oh. How are you guys sitting? Are you guys short right now? I know some of you guys are probably sitting long, huh? It's okay, you can tell me. We'll be enemies in the meantime, but that's alright. So right now we have an interesting dynamic. So you look at the 2 minute, guys, trying to turn that into resistance, but I would argue that the 2 minute on the 5, I'm sorry, the 20 EMA on the 5 is going to be more heavily watched, more of a self-fulfilling prophecy than the 20 on the 2. Okay, and that goes against my trade, but that's the truth. So, just gonna see how that plays out. Gonna leave it on, gonna let it work. Yeah, Nate, gotta let it come to you, man. No trades, walking away too slow, Jeremy. All right, brother, I'll see you tomorrow. Nice job, John. Good work. Trying to give up that 20 on the 5 now and reject it off the 20 on the 2. Coming into that low now, let's see if we can get a wick down through. There's going to be a few stops there. It hasn't, this bottom here hasn't been present for too long, so I wouldn't expect a ton of stops to push us like 20 points. But there's going to be a few. Let's see if we can get something triggered here. That's okay, John. Just go trade by trade. Hey, Mo, what's up, brother? down, get some stops going. Well, I think we triggered maybe what was there. This trade's been on for about an hour 20 now. Again, way longer than my average. But that's okay, I gotta let it do what it does. That ATR is now below 12, we're sitting about 11.8. That's the average range of a 2-minute bar currently for the last 20 minutes. But as far as, you know, if we look here, this will give you a better look. As far as down to target currently sitting 420. There's really not a lot of chop in the way. So I might just end up leaving this on to full target here. If we can hit it. You know, there is that 50% retracement to think about, which I can actually show best here on the 5. You know, that 50% retracement. Here, let's look at it this way. So we had a 130-point move. Yeah, you're talking 50% right around my target, which is fine. I'm not really pushing it that hard. But 50%, that's not just meaningless, right? What you have to think about is shorts that entered at the bottom, like of that move here, and then averaged in. They can close at about break even in this region somewhere. That's buying pressure, shorts closing, right? Which goes against what I'm interested in, but that's okay. I'm still within the region at target. Now again, guys, on a typical day from 10:30 Central, so right now until at least noon minimum, I would be streaming only to members of the Tomb. That launch is officially Friday. It's on pre-sale. Today only it's 30% off. You can get grandfathered in at that rate. Here, I'll drop the link for you. There you go. Links in the chat if you want to check that out. You can either join just the Futures membership or you can grab a gold pass if you also trade stock. Now let's see if we can get down to this 40-point target here. It's probably going to take a little bit of time here. Bit of a push, about halfway there. Comment Troll said, was thinking more on the funded Apex side in terms of drawdown capacity. Oh, you're asking about size. It depends on the account. So, Troll, with Apex, a lot of people will buy the 50K accounts and then trade 3 minis, which I think is crazy. But you have to write a business plan for prop, okay? Write down, okay, what are you willing to have in terms of investment with your expenses? That's eval costs, that's PA activation fees, or funded activation fees at a different prop, whatever. And you have to determine, okay, what am I willing to spend and what kind of revenue generation am I looking to get? Then what you should determine is how long on average, it's gonna vary, do I wanna try to hold on to accounts? Do I wanna push it really hard and below accounts have a new set every 3 weeks? Or do you wanna push it, you know, take it slow and have a new set maybe twice a year? That's going to determine size. Now, for me, I think the minimum, kind of the bare minimum to trade a full mini, if you're going to trade scalping style, which is multiple trades per day, which is not really happening here today because of the range, but that's going to be typically my style. Here we are, getting pushed downside. The minimum account size, I think, for a mini is going to be the 150K accounts, if not the 250s. The 300s even better, but they're hard to pass. Now, if you're if you're trading very aggressively in terms of your business plan, and you want to trade a mini on a 50K account, fine. But just know you're going to go through more accounts. But if that's part of your plan, no big deal. Blowing accounts, I don't think, is the end of the world if you're profitable in your prop trading business, okay? There's just a stigma around it because people think it makes you a bad trader. No, it makes you a planned out trader if it's your plan to cycle through accounts at a specific time frame. Now, if you're blowing accounts because you're gambling, that's different. All right, got to see the 420s here. Again, the one thing that I'm kind of looking at is this region here. But there's enough, there's this wick, but there's also these wicks, which at that point, there's going to be stops and there's going to be buyers down here. But at that point, I'm already out once we get to these wicks. So it's kind of an in-between zone, but I'm fine with that. We'll see if we can get hit down there. There's just no good reason to manage here. If I'm taking it off here, that's an emotional decision. I'm not into that. There's the 5 minute. That's what we're looking like. 2 minute, different look. A little more zoomed out. Yeah, listen, break-even stops. I'll have that camera fixed in the near future, by the way. Break-even stops, I think are fine, but on this kind of trade, I'm giving it room for a reason. I'm not particularly interested in getting stopped out at break-even on a pullback when you're dealing with trailing drawdown. Okay, so the plan here is just to give it space. If it turns around and stops me, fine. Again, I think a lot of times trailing the stop really close is very emotional, but I think there's a time and place to do it. Okay, that's a nuanced answer, but in this case, I'm leaving it as is, not over managing. And if it turns around and stops out, I look like a moron, but that was part of the game. That was the plan, right? That's gonna happen. Can't always just be concerned about looking smart. So you look at this 5 minute, the way this is developing. Remember, we had the 2 minute, the 20 EMA, and the 2 attempting to act as resistance, right? A little bit. The 5 minute was really trying to hold. We've now given that up, and we're attempting, have not done so yet, to claim that as well as resistance, which I think is the more important one to claim. Yeah, Lucas, I saw that. Ukraine to implement partial ceasefire now. That's what Zelensky just said. Testing that 20 here on the 5 as we speak. Hey, Panther, I don't know. I don't know, is it? That's part of the fun. I think a lot of people think it's like a troll account. No, that's really my wife. She pops in the comment section sometimes, and it's funny. I think people think it's like someone just trolling me. Well, there we are, back to 20 points in the money. Gotta get a bit more of a push. Now, there are going to be some stops. I would imagine not a ton, but there are going to be some stops just below this curl. Long setting their stops in that obvious region. Now, if volatility were a little bit higher, you know, not 13 on an average on a 2-minute bar, which is very low. And if I wasn't in a trade, I would likely place a stop limit sell just below that wick to try to stop hunt that, which is good because it supports my existing trade. But I don't expect it to push 20 points in the money. It just isn't. Volatility's down. I don't think there are that many stops, but it's an interesting zone. Allow it to cook. Gotta let this trade cook a little bit, man. Target down at 420. Gotta get through this low here. The longer we have wick lows down here at this 35 region, the more stops are gonna pile up, the better that break. If we can see the break, is the key. Yeah, this trade, we've been in this trade now for almost an hour and a half, which is crazy. That's very, very long for me on average. Well, time to do my YouTuber thing. If you guys haven't already, I don't think I've asked a single time, subscribe to the channel, right? I mean, I will be live every morning, 8:15 a.m. Central. And that's about the extent of that you're going to get. Really need a push here, man. More and more stops piling up below that 35 wick. But again, with that ATR sitting at 12, almost back to 13, that's an improvement. You know, that stop hunting isn't going to push us 20 points. It might push us 5, but it puts us in the right direction. Okay. So here we go, trying to test that 20 EMA on the 5 as resistance. Really need to see that hold. At least zoomed out. Now, what's really interesting, guys, is you look at this, allow it to cook. You see the 20, see how that's lining up now on both the 2 and the 5-minute charts? So I want to see that hold as resistance here. Making a test of that here. Let's see if we can get a zoomed out rejection. Doesn't have to be perfect here, but attempting a break back upside. That's where we currently sit. Pretty much break even. Well, guys, listen, I am going to leave this trade on. You know where we sit. Okay, I'm going to leave this on here. And wanted some resolution before we pop off, but you know where we sit, and we'll leave that on and see how we go. All right, guys, listen, every day, 8:15 a.m. Central, I am live. We'll see you tomorrow morning. Have a good one.